I would like to give some examples. This is volume 2 of cryptocurrency. So I would like to give some reasons why people usually fear engaging in cryptocurrency trade, if you like. Volume 1, which is significantly long, but very, very important. I would urge you that you listen to it perhaps before even you go to volume 2. So this is volume 2, and I would like to give some substantive reasons why people usually have expressed fear when they're engaging in terms of cryptocurrencies, and the reasons behind some of these fears. Number one, especially from my point of view as a Ugandan, is regulatory uncertainty. Why that does become an issue? Because the lack of consistent global regulations and the evolving nature of crypto regulations lead to uncertainty. So people usually fear in terms of potential legal consequences, in terms of restrictions that engage in cryptocurrencies, in terms of the use or even the investment. Another fear associated with cryptocurrency is volatility. Why does that become a fear? Because cryptocurrency is actually known for their price volatility in terms of sharp price fluctuations, and therefore they can be unsettling for investors, leading to fear of losing value or even not being able to predict price movements. And then another aspect is in respect to security risks. Why does that become a concern? It concerns about issues to do with hacking, for example, scams or even fraud in the cryptocurrency space that have actually resulted in the fear of losing funds. High-profile exchange hacks and even Ponzi schemes have fueled these concerns. And then there's also an aspect of lack of consumer protection as another issue. Unlike traditional banking systems, cryptocurrencies may actually lack the same level of insurance and consumer protections. So people fear basically rise from the possibility of losing funds without recourse in terms of cases of theft or even loss. And then a very popular one, which is illicit activities. Why? Because cryptocurrencies have actually been associated with illegal activities such as money laundering and even black market transactions. And so these associations raise fear about their potential misuse. Another fear that is associated when you're dealing with cryptocurrency is the issue of market manipulation. There's an aspect in terms of fear of market manipulation, in terms of because it exists due to the unregulated nature of many cryptocurrency exchanges. The perception of whales and the insider trading contributes to some of these concerns as well. And then another issue in terms of a fear is lack of understanding. Why? Because many people are unfamiliar with how cryptocurrencies and even blockchain technology does work. So this lack of understanding can actually lead to fear in terms of investing, in terms of perceived as a complexity or perhaps risky business, if you like. And another issue is aspect to do with environmental concerns. Why does that become an issue? The energy-intensive proof of work, what they call the POW, consensus mechanism, is used by some cryptocurrencies, such as Bitcoin, has actually raised environmental concerns. Some fear the negative impact of cryptocurrencies on the environment in terms of that perspective. And then also another issue in terms of a fear is loss of privacy. Why? Because some cryptocurrencies like Bitcoins are not entirely private, and so transactions are recorded on public ledger, for example, and therefore privacy-conscious individuals may actually fear that their financial transactions can actually be traded or even traced. Another aspect in terms of a fear is what they call technological risk. Why? Because concerns about bugs, for example, in terms of vulnerabilities, or even what they call hard forks in cryptocurrency networks that can lead to fear of financial loss, especially for those holding significant assets. That's another one. And another fear could also be in terms of competitive threats to traditional finance. Not so. Why? Because traditional finance institutions may actually view cryptocurrency as a disruptive threat to their business models, and therefore fear arises from potential loss of control over the financial system. Also, in terms of another fear is in terms of inherent scarcity, right? Why does that become an issue? Because scarcity is a core feature of cryptocurrency, like Bitcoin. Some fear that the limited supply could actually lead to what they call deflationary pressures and discourage what they call spending, negatively impacting on the economy, as it were. So, my friends, even as we argue cryptocurrency, or as we argue digital money or cryptography, call it, it's important to note that while these fears are actually valid, for varying degrees. They also coexist with positive aspects in terms of cryptocurrencies, such as financial inclusion, such as innovation, such as potential investment opportunities, and therefore individuals and institutions considering involvement with cryptocurrencies often weigh these high risks against the potential rewards. Okay, and regulatory efforts are actually continually evolving to address some of these concerns, and so it's important to take note of them. Some of the others that may come to mind are what they call exit scams. Why does that become an issue? Some fear that cryptocurrency projects, especially initial coin offerings and few tokens, could actually be set up as exit scams, where creators raise funds and then disappear without delivering on their promises. And it happens. It has happened in Uganda, and I know quite a number of people have lost some money in that context. Then another fear is what they call taxation complexity. Why? The tax treatment of cryptocurrency can be complex, leading to concerns about their potential legal and even tax issues related to trading and holding cryptocurrencies. And then another fear is an aspect in terms of dependency on technology. Why? Because fear of technological dependency exists. So as cryptocurrencies rely on what they call complex software and blockchain infrastructure, so the risk of software bugs or even network disruptions can actually impact the users. So that's another great fear. Also, another fear could be lack of intrinsic value. Why? Because critics argue that cryptocurrencies have no intrinsic value, and their worth is based solely on market speculation, which can lead to fears of price bubbles and even crashes. So that's another aspect that people have. Then another fear could be an aspect of negative media coverage, which is predominant in almost most jurisdictions. Why? Because negative media reports about cryptocurrency related incidents, for example, scams or even illegal activities, can actually contribute to fears and even negative perception among the public, which is something also that is important to note. And there's also what they call market exuberancy. Why? Because fears of what they call irrational exuberancy in the cryptocurrency market can lead to concerns about potential bubbles, where, for example, prices become detached from underlying fundamentals. Not so. So that's another question for debate as well. Another fear could be lack of reversibility, or what they call reversibility. Why? Because unlike traditional financing systems, cryptocurrency transactions are often irreversible. So if, for example, user sends funds to the wrong address or even falls victim of a scam, there may be no way to recover the funds. So that's another quite challenge that comes with it. And then there are also what they call geopolitical risks as a fear, in terms of concerns about geopolitical tensions and regulatory actions taken by government against cryptocurrencies that can create fear of legal, even political risks over users. A good example is one that happened between the war between Ukraine and Russia now. The issue of how that has impacted some of the e-commerce, or call it what, digital money. So these concerns highlight multidimensional nature in terms of cryptocurrency space. So whereas it definitely can impact you as a user, even an investor. So it's important that you conduct, as I said, a thorough undertaking in terms of an evaluation of your risk. Consider your own risk tolerance before engaging in terms of cryptocurrency, and visit regulatory efforts in terms of standards, in terms of concerns, in terms of safety concerns, and even transparency. So it's extremely important. Also, some other common fear that can come with that is in terms of what they call sustainability concerns. Because here, under this, we're arguing that the energy consumption associated with what they call proof of work, POW, cryptocurrencies like Bitcoin, has raised fears about sustainability and even environmental impact. So critics argue that the energy usage is actually excessive. So that's another concern as a fear. There's also what they call lack of support in case of disputes. Fear arises where, for example, potentially difficult in terms of resolving resolving disputes related to cryptocurrency transactions. So the lack of centralized intermediaries can actually make it challenging to address issues or even fraud in respect to that aspect. And then a fear in terms of ransomware, or what they call cybersecurity threats. Cryptocurrencies are often used in ransomware attacks as a preferred form of payment by cyber criminals. So this association has actually contributed concerns about security threats and even illegal activities. And then another fear could be an aspect of limited use of cases and adoption. Concern exists that cryptocurrencies have limited real-world cases. Although in volume 1, you remember volume 1 of our argument of this particular course or this discussion, we mentioned quite a number of cases. And if you can go back and listen to volume 1 of digital money on YouTube, you can get those cases. Market manipulation can be another issue. The unregulated nature of the many cryptocurrency markets has led to fears of price manipulation, including what they call pump and dump schemes, where prices are artificially inflated and then crushed. So that's another aspect. And then the lack of inheritance planning. Inheritance planning. Why does that become an issue? Users may actually be concerned about how to ensure their heirs actually have access to their cryptocurrency holdings in the event of their death. So as cryptocurrencies require private keys for access, so that's another fear. And then there's what they call deflationary fears. Why does that become a concern? Because some people fear that deflationary cryptocurrencies with limited supplies, for example like bitcoins, may actually lead to reduced spending and even economic instability due to hoarding, as it were. And then another aspect in terms of a fear would be what they call identity theft and phishing. Phishing, I'm talking about this phishing with P-H-I-S-H-I-N-G. Cryptocurrency users can actually be targeted by identity thieves and even phishing attacks, leading to fear of losing personal information and funds. So that's another important aspect to note. And then currency devaluation as another fear. In countries, for example, with unstable fiat currencies, there may be fears that investing in cryptocurrencies is not reliable in terms of value, and therefore cryptocurrencies may also experience devaluation. Another fear could also be in terms of complexity of wallets and private keys. Why does that become an issue? Because the need to secure and manage private keys and wallets can actually be daunting for new cryptocurrency users, leading to concerns about the risk of losing access to funds. Not so. So, as I say, these fears definitely reflect the multifaceted nature of the cryptocurrency space, where, as I say, technological, regulatory, and financial considerations do intersect. So, usually what happens is as the industry does evolve and the regulatory clarity improves, some of these contours may need to be or may have to be alleviated, while obviously new challenges may actually emerge. Some more fears in context of cryptocurrency would be what they call counterparty risks. Counterparty risks exist when individuals or institutions, for example, involved in cryptocurrency transactions or services fail to go bankrupt. They fail or even go bankrupt, resulting in what they call potential financial loss. So that's something that is a great challenge. And then there's what they call irreversible loss of funds. Why does become a question in terms of users fear making mistakes in cryptocurrency transactions, such as sending funds to wrong addresses, as I told you, which can result in irreversible loss, as it were. And then lack of consumer support is another challenge that people go through. Many cryptocurrency platforms and services have limited or even non-existent customer support, which can actually be frustrating when users face issues that have to do with particular question. And then perhaps one that is extremely important is educational barriers. As a fear, because the complexity of blockchain technology and cryptocurrencies can actually create fears of not understanding how they work, making users hesitant to actually participate. So that's another big fear. And then the issue of hype and speculation. Why does that become a concern? Because concerns arise from hype and speculation in the cryptocurrency market, with some fearing that it may lead to bubbles and even sudden crashes. So that's another aspect that people engage in. And then there's aspect to do with competing cryptocurrencies and technological shifts. Why does that become a fear? Because this fear exists regarding technological shifts in cryptocurrency space, for example, where new cryptocurrency and blockchain innovations could actually make older technologies obsolete. And that is perhaps a very important aspect as well. And then the aspect of lack of fundamental value, not so. Under this, why does that become an issue? Because critics can argue that cryptocurrencies lack intrinsic value, which can create concerns about their long-term sustainability. So that's another aspect that you may want to guard out for. And then another fear could be what they call tax reporting complexity. Why? Because taxation of cryptocurrency can actually be complex, and fear arise, about the challenges of accurately reporting cryptocurrency transactions for tax purposes. So that's another great fear that comes with it as well. And then, as I said, the link to cyber attacks. We just made that a little bit clear, but we can emphasize and say the association, for example, between cryptocurrencies and cyber attacks can create the fear of negative publicity and government crackdowns. And perhaps that's what overrides most of the governments not to engage in cryptocurrencies. And as I said, the fear of investment scams. Why does that become a concern? Because concerns exist about investment schemes and scams in cryptocurrency space that promise high returns but result in financial losses. As I said, we are as a country have faced quite a number of scams and quite a number of dangers related to cryptocurrency. So there's every reason to be concerned. So I'm just pointing out some of the fears and the importance of careful research, the importance of due diligence, the importance of responsible use of cryptocurrencies. So as cryptocurrency industries continue to evolve and mature, addressing this fear through regulation, through security enhancements, through education is extremely essential in terms of building trust and confidence among users and even investors. So if we overcome these common fears and these concerns that are associated with cryptocurrencies, then we can require a combination of education, responsible practices, and even regulatory advancement in terms of addressing them. And I'll give some of the ways in which we can address the fears that we just talked about. How can Uganda address its fears? Number one, education and awareness. Increase knowledge and understanding of cryptocurrencies and blockchain technology. This can help alleviate fear, encourage individuals to educate themselves about how cryptocurrencies work and their potential benefits and their risks, which I think we did. Please listen to our YouTube, Lubogo, Isaac, Christopher, where we urge that. Number two, security best practices. Promote the use of secure wallets, strong and unique password, for example, and two-factor authentication to protect funds. So advise users to keep their private keys offline and use hardware wallets for added security. Number three, regulatory clarity. We need to advocate for clear and balanced cryptocurrency regulations to provide users with a sense of security and protection. In other words, regulatory frameworks can help mitigate fears related to fraud and even illicit activities. Not so. Another aspect in terms of protecting ourselves, sandbagging ourselves, is risk management, emphasizing the importance of responsible investment practices. Not so. Encourage diversification and not investing more than one can actually afford to lose. So in other words, understand what cryptocurrency investment risks do carry. When you do that, you'll probably be a little bit safer. Number five, customer support and even user-friendly platform. Choose cryptocurrency exchanges and platforms that provide good customer support and prioritize user experiences. These platforms should actually be easier to use and even offer support when needed. Not so. Number six, avoiding scams. Extremely important. We need to teach users to be conscious in terms of and skeptical to offers that seem to be too good to be true. Raise awareness about common cryptocurrency scams and how to recognize and even how to avoid them. Okay, that's extremely important. And then number seven, use reputable services. Encourage the use of what they call reputable cryptocurrency services and platforms which track records of trust and reliability. In other words, research and verify the credibility of the services that you use. That's extremely important. And then number eight, tax compliance. Advise users on, to understand their tax obligations related to cryptocurrency transactions and to maintain accurate records of tax reporting. That is extremely important. And then another aspect as number nine is legal and regulatory compliance. It's important that you ensure compliance with local and national laws and regulations governing cryptocurrency use and their transactions. It's extremely important. Number 10, environmentally friendly choices. In other words, it's also important for you or us to consider the environmental impact of cryptocurrency and explore options that align with sustainable practices, such as supporting cryptocurrencies with more eco-friendly consensus mechanism. My friend, that is extremely important. And then another aspect as well in terms of importance is privacy protection. We need to learn how to use privacy-focused cryptocurrencies and take measures to protect personal information and financial privacy. That is extremely important. Another aspect that you may want to look at is what they call diversification of assets. We need to diversify investment beyond cryptocurrencies to reduce on the exposure of price volatility. In other traditional investment like stocks and bonds can actually provide stability as well. Okay, so another in terms of redress or perhaps sandbag is to seek professional advice. For those who are unsure about how to navigate through cryptocurrency space, seek advice from financial professionals or even tax advisors that can provide valuable guidance before you take that important decision. It's extremely important. We don't want to lose you. We don't want to lose your faith or your heritage. Okay. Another is community and peer support. We have to have what they call join online forums and communities of cryptocurrency enthusiasts to share knowledge and even ask questions and find support from experienced users. Yeah. So when you do that, you will overcome some of the fears that are related to cryptocurrency. As I said, overcoming fears related to it is a gradual process that involves informed decision making, responsible practices, and supportive community. So the key is to take cautious and informed approach while recognizing that any financial asset, cryptocurrencies come with risks and rewards, just like any financial asset. So as the regulatory landscape continues to develop and technology matures, many of these fears may be elevated, as I said, over time. Not so. So that's extremely important for you to understand. Now, cryptocurrencies and digital money offer several advantages over traditional fiat currencies, as I told you. I just want to go through some of the basic advantages that would that go overboard in terms of good things for cryptocurrencies. The fact that it's decentralized, the aspect of decentralization as an advantage. Cryptocurrencies are decentralized, meaning they are not controlled by the central authority like a government or central bank, and this can reduce the risk of government interference and even manipulation. An example, Bitcoin is a decentralized cryptocurrency that operates on a distributed ledger, allowing users, for example, to transact without the need for intermediaries. Number two, they offer what they call security as an advantage. Cryptocurrencies, for example, use strong cryptographic techniques to secure transactions and even control the creation of new units, right? So this can help to provide what they call high-level security against fraud and even counterfeiting. An example is blockchain technology, which underpins many cryptocurrencies in terms of offering transparency and security. And it has been used for secure supply chain management, ensuring authenticity of products. Number three, reduced transaction costs. When you engage in it, you are probably having an advantage in the sense that cryptocurrency transactions often have lower fees compared to traditional financial systems, particularly for cross-border transactions. An example is when you look at Ripple as a cryptocurrency, what they call XRP and Stellar, XLM. They are cryptocurrency designed for efficient cross-border payments, aiming to reduce transaction costs and even settlement times. Yeah. Another, in terms of advantage, is accessibility. As an advantage, cryptocurrencies are accessible to anyone with an internet connection, providing for financial services for people in undeserved or unbanked regions. A good example, in countries with limited banking infrastructure, cryptocurrencies can actually be more accessible and even affordable way to send and even receive money. That speaks for itself, not so. Another, in terms of advantage, perhaps number 5, would be the aspect of speed. As an advantage, cryptocurrency transaction can actually, be processed more quickly than traditional bank transfers, especially on international payments. And a good example is what they call the Dash, a cryptocurrency which is known for its fast confirmation times, making it suitable for everyday transactions. Okay. Another advantage could be in terms of financial inclusion. We're bearing this, we're trying to argue this against traditional banking, as I say. So in terms of financial inclusion, as an advantage, cryptocurrencies can offer financial services to the unbanked and underbanked populations, providing access to the global economy. A good example is the mobile money issue in Uganda as a mobile payment system that has actually provided financial services to millions of people who previously had limited access to banking facilities. Not so. So please understand that. Another advantage is in terms of transparency. As an advantage, blockchain technology, for example, ensures transparency and immutability in terms of transactions, reducing the risk of fraud and corruption. Okay, a good example is the Estonian government, which uses blockchain for land registries and providing what they call transparent and even tamper-proof system for property ownership records. Please benchmark from that as well. Another, in terms of advantage, is what they call ownership and control as an advantage. Cryptocurrency users have full ownership and control over their funds. They are not reliant on third parties like banks for access to their assets. Okay, a good example is, for example, with Bitcoins, users have full control over their private keys and funds, eliminating the need of intermediaries. That's something that is extremely important for you, again, to comprehend. Another advantage, perhaps as number 9, would be what they call global reach. In terms of advantage, cryptocurrencies are actually borderless and can be used for international transactions without the need for currency conversion or dealing with exchange rates, right? A good example is, for example, the Ethereum smart contracts, which can actually facilitate things to do with global business arrangement without the need for traditional intermediaries, making international trade more efficient. Please comprehend and understand that. Another advantage, by way, again, could be one of innovation and what they call programmability, right? Innovation and programmability. In terms of an advantage, cryptocurrencies allows for the creation of programmable money through smart contracts, enabling a wide range of applications, including decentralized finance and non-fungible tokens, what they call the DEF and the NFTs. A good example is Ethereum's smart contract platform has enabled the development of various decentralized applications and DeFi's protocols. And now it has led to revolutionizing the way financial services are actually accessed and even how they are executed. Another advantage is in terms of what they call 24/7 accessibility as an advantage. Cryptocurrencies operate 24/7, allowing users to transact and access their assets at any time. So unlike traditional banks with limited operating hours. A good example is traders can actually engage in cryptocurrency markets around the clock, providing flexibility for global investors. So as I said, I could go on and on and on, but I just want to understand that, please understand, when you are listening to this particular discourse of version 2 or volume 2 of Digital Money, please take the liberty of listening to volume 1, because we laid a lot of background. So these advantages showcase the transformative potential of cryptocurrencies and digital money in providing financial services that are more inclusive and efficient and even secure, particularly in a globalized and digital world. Yeah, and so when we argue that also in terms of more advantages in terms of cryptocurrencies and digital money, remember I'm talking about cryptocurrencies and digital money, so I'm combining the two as advantages because that has been the gist of our discussion. There's an advantage in terms of reduced fraud risk. Cryptocurrencies are based on secure, what they call cryptographic technology, reducing the risk of counterfeit currency and even fraudulent transactions. An example is Bitcoin's blockchain technology ensures that transactions are verifiable and tamper-proof, reducing the risk of fraud. And then another advantage could be in terms of micropayments and what they call fractional ownership. As an advantage, cryptocurrencies enable what they call micropayments and even fractional ownership of assets, allowing for new businesses in terms of models and even financial arrangements. An example for that could be cryptocurrencies like Bitcoin can actually be divided into small fractions, what they call satoshis, making micro transactions feasible. So that's extremely also important. Another advantage could be in terms of what they call resiliency to inflation, yeah, as an advantage. So some cryptocurrencies like Bitcoins have limited supplies and are designed to be resilient to inflation, making them attractive as a store of value. A good example could be during the periods of, for example, high inflation or even economic instability. People in countries, for example, like Venezuela, have turned to Bitcoins as a store for value. So that could be something that you may want to look at and also benchmark. And then another advantage could be in terms of what they call global crowdfunding. As an advantage, cryptocurrencies and token sales have actually enabled global crowdfunding, allowing startups to raise capital from global investor base. A good example is Ethereum ICOs platforms enable numerous blockchain projects to secure funding, democratizing access to capital. So that's another important advantage as well. And then the fact that programmable money for what they call automated tasks as an advantage, cryptocurrencies can actually be programmed to automate financial tasks such as recurring payments or what they call escrow services, reducing the need for intermediaries, as it were. A good example could again be Ethereum-based smart contracts that can automatically execute complex financial agreements without human intervention. Yeah, so that becomes a very, very strong advantage again. Another advantage could be in terms of what they call ownership of digital assets. In terms of advantage, cryptocurrencies could enable ownership of digital assets, such as domain names and digital art and even in-game items using blockchain technology. An example could be the use of what they call non-fungible tokens, NFTs, that allow artists and even creators to sell unique digital assets and even retain ownership rights. So that's another advantage. Another advantage could be in terms of what they call cross-border charity and aid. As an advantage, cryptocurrencies enable efficient and transparent cross-border charitable donations and even aid distribution in terms of reducing overhead costs. So a good example could be in terms of charities like UNICEF, which accept cryptocurrency donations to fund projects that benefit vulnerable populations. Please take that also as another important aspect. Another advantage could be in terms of financial privacy. Yeah, in terms of advantage, some privacy, focused cryptocurrencies offer what they call enhanced financial privacy, allowing users to conduct transactions with greater anonymity without being known or disclosed for that purpose. A good example is the Monero and Zcash, that are cryptocurrency designed provides strong privacy features for users. Yes, another in terms of advantage could be reduced counterpart risky, or what they call reduced counterparty risky. As an advantage, cryptocurrencies can actually minimize counterparty risk by using trustless systems where users rely on code and cryptographic verification rather than trusting intermediaries, as I say. A good example is the DeFi platforms that actually facilitate lending and borrowing, use smart contracts and reduce the use and also reduce the need for traditional intermediaries and also associated risk, as it were. So, as I said, these particular advantages further highlight the facility and the transformative potential of cryptocurrencies in terms of and digital money for that purpose, in terms of the various aspects of finance, technology, and even economic in terms of economic development. I would also want to argue that that there could be quite enormous other advantages that I wouldn't want to leave out, because this would help us to really understand what we're talking about as a comparative, as a benchmark perhaps. But my advocacy is not really in terms of it, but in terms of the future. My eyes are clearly open in terms of the future. Financial control. Cryptocurrency offers users have a greater control over their financial transactions and can actually choose when and how to transact even without reliance on intermediaries. Not so. And also they can actually make instant, permissionless transactions without the need for banks or payment processors, as it were. And then the aspect of asset tokenization, for example, as an advantage. Digital money and blockchain technology enable what they call tokenization of physical and even digital assets, allowing for fractional ownership of real, estate and even art, and even more. Maybe digital money is an aspect that we need to incorporate in schools, even in law schools perhaps, because of the wealth of information that is involved. Real IT, for example, is a platform that tokenizes real estate properties, allowing individuals to invest in property with small amounts of money. Yeah. Another advantage could be in terms of reduced cross-border friction. Yeah. What we call as an advantage, cryptocurrency, simplify cross-border transaction by eliminating the need for currency conversion and reducing settlement times. Yeah. RIPS, for example, RIPS technology is designed to facilitate fast and even cost-effective cross-border payments for financial institutions. So that is a great advantage. Yeah. And then we could also argue in terms of financial empowerment as an advantage. Cryptocurrencies can actually empower individuals by giving them what they call direct access to financial tools and services, reducing reliance on traditional banks. Yeah. So with a smartphone and an internet connection, individuals can actually, especially in undeserved regions, can actually access global financial markets through cryptocurrencies. So that's another quite big advantage, if you like. Then there's what they call immutable records as an advantage. Cryptocurrency transactions are actually recorded on what they call blockchain, creating what they call an immutable ledger that enhances transparency and trust in financial interactions. Yeah. So by using that as an example, I could argue and say supply chain companies use blockchain to track the origin and the journey of products, reducing the risk of counterfeiting. Yeah. So that's another advantage as well. And then there's what they call smart governance and voting. Yeah. Which is super advantage in the sense that cryptocurrencies enable transparent and secure governance models and voting systems for organizations, reducing the risk of fraud. An example, for example, I would argue and say that some blockchain-based projects use decentralized autonomous organizations, what they call the DAOs, for decision-making and even governance. So all these are advantages that we can benchmark and even co-opt as a nation as well. And perhaps also another advantage could be in terms of financial innovation. Yeah, cryptocurrencies drive innovation in the financial sector, leading to the development of new financial products and services. A good example is the DIF again, in terms of platforms that have actually introduced decentralized lending and even yield farming and liquidity provisions, offering what they call new financial opportunities. So again, that's another great advantage that probably we need to think about. And then we have what they call reduced dependency on traditional banks as an advantage. Cryptocurrency always, as I said, can help you reduce your dependence on traditional banks and financial intermediaries on various financial services. A good example is what they call the stable coins that are often used for transferring funds internationally without relying on traditional banking infrastructure. So as I said, I could go on and on and on and on. But when you find our book, Digital Money, Cryptography, Cryptocurrencies in Uganda by Christopher Lubogo at almost all major bookstores, but also majorly on Lubogo.org and Suigeneris app, you will probably comprehend some of the things. You could also argue in terms of global market access. Cryptocurrency provide access to global markets, allowing users to trade and invest in assets and even projects from around the world. A good example is a cryptocurrency exchange can offer access to a wide range of digital services or even assets, making it easy to diversify investment globally. And then an aspect of economic inclusion as an advantage also. Cryptocurrency can actually promote economic inclusion by providing access to financial services for individuals who are excluded from traditional banking systems. As I say, that's extremely important. I cannot overemphasize that. I've just said that on and on. In regions, for example, with limited banking infrastructure, mobile-based wallets and cryptocurrency apps enable access to financial services. Yeah, so those are extremely important arguments in terms of emphasizing the strength of digital money and cryptocurrencies, as it were. It's extremely important, my friends. But as I said, when you're doing this, be mindful of the other side. It's not just a question of saying, man, the guy is making a case for us. I'm just saying, I'm opening your eyes, but also I'm also saying, open with wisdom. It's not a mandate to simply just go out just like that, like they say. Yeah? Another advantage could be in terms of trustless transaction. Cryptocurrency transactions do not require trust in central authority. They are based on mathematical algorithms and consensus mechanisms. A good example is Bitcoin transactions are actually trustless, relying on what they call decentralized network of nodes for validation. Not so. So you must comprehend that as well. Reduced settlement times as well is another advantage. Cryptocurrencies can actually significantly reduce on what they call settlement times. And in doing so, they actually allow for faster and even more efficient transactions, especially in cross-border scenarios. I'll give an example. Ripple, what they call the XRP, is designed to expedite cross-border transactions with minimal settlement times. Okay, that gives you what I'm talking about. Yeah, and then inclusivity in terms of global workforce is a great advantage. Cryptocurrencies could also enable freelancers and remote workers to access global job opportunities and receive payments without actually facing cross-border payment hurdles. Yeah, I'll give an example. Yeah, platforms like Bitwage, which allow freelancers to receive payments in cryptocurrency, providing financial access for remote workers worldwide. So all these are basic and quite important for the future of digital money in a general wide perspective. In terms of ownership of digital content, for example, cryptocurrencies and blockchain technology enable ownership and transfer of digital content such as music and art and even intellectual property. I'll give an example. Blockchain-based, what they call the NFTs, are used to represent ownership of digital art and even collectibles. Think about that. Yeah? And then the aspect of immutable identity verification. I made that a little bit earlier. But cryptocurrencies can actually be used for security identity verification, reducing the risk of identity theft and even fraud. So what are we talking about? Blockchain, some blockchain-based identity verification systems even offer users control over their personal data and reduce the risk of data breaches. Yes, that's extremely important. How about aspects to do with philanthropy and charitable giving? You know, cryptocurrencies can actually facilitate transparent and efficient charitable donations, ensuring that funds reach their intended recipients. Think about that. So cryptocurrency foundations and even organizations raise funds for charitable, causes, providing transparent records of donations. And then you could also argue it in terms of savings and investment options. Yeah, cryptocurrencies offer individual diverse options for savings and investment strategies beyond traditional assets like stocks and bonds. For example, staking and yield farming in what they call DEFs or what they call DEFs platforms provide users with opportunities to earn passive income on their cryptocurrency holdings. Yeah, so that's another great advantage. And then the aspect of what they call global economic stability. In terms of the global economic stability, cryptocurrencies can contribute to global economic stability by providing alternative financial systems during times of economic crises. I'll give an example. During times of, for example, of economic turmoil, some individuals turn cryptocurrencies as a store of value and a means of preserving their wealth. So these are things, my friends, that the future is upon us, and we just can't let it be. Cross-platform compatibility, for example, as an advantage. Cryptocurrencies can easily be transferred between different platforms and services, providing what they call a seamless user experience. Yeah, so wallets like MetaMask and Trust Wallet allows users to interact with various DEFs platforms in terms of streamlining their cryptocurrency experience. And then how about the argument of financial sovereignty? Yeah, as an advantage, cryptocurrencies provide individuals with greater financial sovereignty, allowing them to control their wealth independently. Okay, so users can actually hold their private keys and access their cryptocurrency without relying on banks and even intermediaries. As I say, I'm just trying to make a case for purposes of opening our eyes. So these advantages will highlight, as I said, a multi-faceted potential for cryptocurrencies and digital money to revolutionize various aspects in our finance, in terms of technology, in terms of our society. So even as blockchain and cryptocurrency space continues to evolve, new opportunities and applications are constantly emerging. So it's important, my friends, to comprehend and understand that that is part of the game. But it is important, as I said, to what? To acclimatize. Yeah? To acclimatize. Now, there are those who argue in terms of disadvantages. It is not fair for me to talk about the advantages without talking about the disadvantages. So let me talk about some disadvantages. Number one, the aspect of volatility. Cryptocurrencies are known, for their price volatility, which can lead to significant and sudden loss for investors. So be careful when it comes to that. Then the aspect of regulatory uncertainty. The fact that many countries have yet to clearly have a clear regulatory framework for cryptocurrencies, creates uncertainty for the users and the businesses, including Uganda. Right? And then how about security risks as a disadvantage? Issues of hacks, scams, frauds, they are prevalent in cryptocurrency space, resulting in the loss of funds and even data breaches. That's a big risk in itself. Yeah? And then the issue of lack of consumer protection as a disadvantage. Unlike traditional financial systems, cryptocurrencies often lack the same level of insurance and consumer protection. So that's something also you must think about. That is something that is extremely, and then the argument of illicit activities. Yeah, as a disadvantage, cryptocurrencies can actually be used for illegal activities, including money laundering, tax evasion, and even black market transactions. So that is another big issue. Yeah, and then the aspect of market manipulation. Yeah, as a disadvantage, the fact that they are unregulated cryptocurrency markets, these can be used and they are susceptible to market manipulation and what they call pump and dump schemes. That's another one. That's another serious one. And the lack of understanding. as a disadvantage, many individuals are unfamiliar with how cryptocurrencies do work, and this has led to investment, poor investment, not so, and also, mistakes in terms of usage. So that's another serious issue. And then the issue of environmental concerns as a disadvantage, as I told you, is what they call proof of work, the POW. Cryptocurrencies like Bitcoins have high energy consumption, resulting into environmental concerns. So that's something that you may want to also think about. Then the aspect of lack of privacy. I know there's an advantage to it, but there's also, when we argue it in terms of some cryptocurrencies like Bitcoin, that are not entirely private, and transactions can actually be traced. Yeah? So that's something also we need to think about. And then the aspect of technological risk in terms of disadvantage. Cryptocurrency networks are not immune to bugs or vulnerabilities and hard forks, which can result in financial losses. So that is also something that someone has to think about seriously. And then the issue of competitive threats to traditional finance as a disadvantage. Traditional finance institutions view cryptocurrencies as destructive threats to their business models, potentially leading to regulatory pushbacks. So that's another issue that is very common, even perhaps that will come out even as we give this talk. Yeah. And then the issue of inherent scarcity as a disadvantage. Scarcity is a core feature of cryptocurrencies like Bitcoin, which could lead to what they call deflationary pressures and even discourage spending. So that's another aspect that again we need to think about seriously. And then there's an argument in terms of exit scams as a disadvantage. Cryptocurrency, in terms of cryptocurrency projects, especially what they call ICOs, have actually been associated with what they call exit scams, where creators raise funds and then disappear. Yeah? How many times have we seen that in our country? And then there's aspect of taxation complexity as a disadvantage, where we are arguing that tax treatment of cryptocurrency can actually be complex, leading to legal and even tax issues for users. Yeah? So those are some of the issues that I would like to argue. Perhaps also there's also an aspect to do with the dependency on technology as a disadvantage. Users are reliant on complex software and blockchain infrastructure, making them vulnerable to software bugs and even network disruptions. So that's a danger in itself as well. And then the aspect of lack of reversibility. I know I talked about that as disadvantage also. Cryptocurrency transactions are often irreversible, meaning that there may be no way to recover funds sent in error. Okay, that's a big one. But as I said, there are transitions. Maybe we've got to get there. Then political risks as a disadvantage. Cryptocurrency can actually be subject to regulatory and even political risks, as governments may actually take actions against them. Yeah. So talk about Uganda right now, or perhaps other countries as well. Yes. And then what they call counterparty risks. I mentioned a little bit of that as a disadvantage, perhaps. But users may face what they call counterparty risks when individuals or institutions involved in cryptocurrency transactions fail. Yeah? So that's another aspect that also we have to look out for. And then the aspect of lack of consumer support. Yeah? As a disadvantage, many cryptocurrency platforms have limited customer support, leading to frustration for users with issues. That's another serious one. That's another serious one. Tax reporting complexity is another question also. In terms of accurately reporting, for example, where cryptocurrency transactions for tax purposes, can be challenging and may lead to even legal and even tax consequences, as it were. So all these components, when you look at them, you want to look at them and say, goodness me, where am I going now? What should be the best bet? So, as I said, these disadvantages and challenges underscore the need, as I said, for individuals to approach cryptocurrencies with caution, conduct thorough research, and understand both potential benefits and risks involved. So as this industry, the cryptocurrency industry, matures, regulatory framework evolves, some of these challenges may be mitigated. Yeah? So it is important for you to comprehend and understand some of the things. I could go on and on and on, but some of you who are really interested could find most of our information in our book, Digital Money, in terms of the law of cryptography in Uganda. Find it at Lubogo or Suigeneris.com, or you can find them in all major repositories of this country, major universities, and also perhaps on the net in many books, like bookstores, for example, like Amazon, Digital to Graph, Smashword, and many other things. So I could urge you on and on, but because of the interest of time and the seriousness of the fact that we'd like you to engage you more in the book and in understanding some of this information, please visit those websites and enjoy. So once again, my name is Isaac Christopher Lubogo. I bring you greetings from Suigeneris. God bless you and thank you for your attention.